Hello traders, and welcome back to another educational video. Today I'm going to explain what a footprint candle is and how we use it in our trading community. One thing I've noticed is that footprint candles are still widely underutilized by many traders, and that's a shame because they're such a powerful tool to take your trading to the next level. So let's dive right in and get started. A footprint chart is a really useful tool in order flow trading. It shows you the buy and sell volume at every price level inside a single candle or bar. So what can you see on a footprint chart? You'll see numbers that tell you how much buying or selling happened at each price. It's like getting an inside look at what's going on behind the scenes in the market. How do you use it? The main idea is to look for imbalances, where buyers or sellers are stronger, clusters of activity, areas with a lot of action, or leg outs, big moves away from a level. These patterns can help you spot opportunities. And why is this important? Footprint charts show you the details inside each candle that regular charts don't. It gives you a clearer picture of what's happening in the market. Now let's talk about how to use a footprint chart effectively. It's all about spotting key details that give you an edge in understanding market movements. First, let's look at imbalances. These are large differences between buy and sell volumes, like 400x50. When you see this, it often means big players are active in that area, and the price is likely to react. Think of it as a hot spot where important decisions are being made. Next, pay attention to clustered volume. These are areas where a lot of trading happens at specific price levels. These clusters usually indicate spots where the price might pause or even reverse. It's like the market catching its breath before making its next move. Then there's candle context. Here's what I mean. Compare the volume within one footprint candle to the overall trend. For example, if you're in an uptrend and you see buy volume dominating, that's a strong sign that the uptrend is likely to continue. And here's a tip if you're just starting out: don't try to focus on everything at once. Start small, focus on spotting large imbalances first. Once you get the hang of it, you can begin combining multiple elements for a more detailed analysis. Alright traders, let's take it a step further and talk about how to identify high probability zones using footprint charts. These zones are areas where the market is likely to react because of significant order flow activity. By spotting these zones, you can pinpoint key levels for potential entries or exits. What are high probability zones? So what exactly are high probability zones? These are created by things like imbalances, large differences between buyers and sellers at a specific price, volume clusters, areas with concentrated trading activity, leg outs, strong directional moves away from a price level, often leaving behind unfilled orders. These zones act as magnets where price is likely to pause, reverse, or continue its trend. How to identify these zones? So how do you spot these zones? Here's a simple process. Use your footprint chart to find imbalances or volume clusters. Mark these areas as horizontal zones on your chart. Wait for the price to revisit these zones and watch for confirmation, like a delta shift or a rejection, before taking action. Combining footprint charts and high probability zones. Pre-market preparation. Before the session, analyze the footprint chart for imbalances or clusters from the previous session. Mark these as key levels on your chart. During the session, wait for the price to approach these zones. Look for confirmation such as a delta shift or a bounce before entering your trade. After the trade, once you're in the trade, use the same tools to manage it. For instance, if delta continues to show strength in your direction, it reinforces your position and gives you confidence to hold. Key takeaways: to wrap it up, footprint charts reveal the battle between buyers and sellers at each price level, helping you spot key areas of interest. Imbalances, volume clusters, and leg outs are high probability zones where price is likely to react. Combining footprint charts with these zones creates a powerful framework for making informed trading decisions. Action step. Here's your homework. Open your platform's footprint chart and start practicing. Look for imbalances and volume clusters. Mark these zones on your chart and pay attention to how price behaves when it revisits them. Over time, you'll see how powerful this tool can be. Alright traders, that's it for today's video. I hope this gave you a clear understanding of how to use footprint charts and identify high probability zones to improve your trading. Remember, mastering tools like this takes practice, so don't rush it. Start small, focus on the basics, and build from there. If you found this video helpful, make sure to give it a like and share it with someone who could benefit from it. And don't forget to subscribe to the channel for more educational content like this. As always, trade smart, stay disciplined, and I'll see you in the next video. Happy trading.